Hi, thank you for joining this mini webinar. It's going to be really crisp and short to the point webinar. Before we get into the presentation, let me just take a couple of minutes to introduce myself. I am CA N. Raja, Chartered Accountant by qualification, a teacher, trainer by passion. I started my career as a banker, credit analyst with State Bank of India, worked for a period of 4 years. In very short period, I had the opportunity of becoming team leader, credit processing cell. So worked on 250 plus projects. It's 5,000 crore plus size. Then came out and started my CA practice, had my practice for a period of 7.5 years. Alongside had this teaching training. Thanks to technology, today through online, I teach 2 lakh plus students all over the world, basically on banking, credit and financial analysis, and majority of them are working banking executive. I'm really glad that my courses are helping them, and I'm sure this course will be relevant and useful for you as well. Let's get into the webinar. Dear friends, welcome to this session on how to read a balance sheet. Friends, financial statements basically comprises two important statements. One is the income statement, which can also called as profit and loss statement, and the other one is balance sheet. So when I say how to read balance sheet, I mean how to read balance sheet as well as the income statement. Now, what purpose this income statement and balance sheet serves? See, the income statement would give the information whether the organization or business unit is making profit or suffering loss, whereas the balance sheet would give the information on financial position of the business unit. So any business will be in existence to make profit and not to suffer loss, but whether they are making profit or loss, they'll be able to know only by preparing these statement, not by merely looking at the activities. So this statement has to be made, and this statement, the balance sheet, would tell what is the financial position of the business unit. I mean, what assets it has and what are the liabilities, who had funded all those assets. We are going to see all those in depth in these sessions. So now we'll see a little bit on income statement, that is profit and loss statement. See, the income statement would talk about all the incomes. Okay, it talks about all the incomes, whereas it will also talk about all the expenses. So the income statement, it is not only going to give you about income, it will also give you what are the expenses. And if income is more than expense, it is called profit, and if expense is more than income, it is called loss. So it's simple, it's very logical. And we'll see a little bit on balance sheet. See, balance sheet will talk about from where the money had come for the business. Okay, and it will also say where those money have been used or how the funds are used. So any business cannot raise money on its own, because business is an artificial person. It has to borrow money from various parties, and only that money can be used in the business. So the balance sheet would basically tell you the various sources of finance. So what can be the sources of finance? One, it can be the owner's funds. Two, it can be banker's funds, bank can give loan. Three, it can be suppliers funds, where suppliers give you credit so you purchase goods. So what we'll do, we'll raise all these funds. These funds will be used for various purposes. One, it can be used for creating fixed assets. A big plant, machinery, factory, equipment, everything. And it can also be used for creating working capital assets. I mean, those assets which are necessary for day-to-day activities of the company. So now we have broad idea about what are liabilities. Liabilities are sources of funds, and uses of funds would actually create assets. It can be fixed assets and working capital assets. Now we have said owner fund is one source of fund. So owner fund would be in the form of share capital and reserves. So what is share capital? This is something which the owner gives directly out of his pocket, and reserves is something, the profits earned by the business unit but not given back to the owners. See, owners are entitled to the profits of the business, but if they don't take the profits and they allow it to be within the company, within the business unit, it will be called as reserves. So owners funds can be two form. It can be direct and indirect. Direct is share capital and indirect is reserves. And again, bank loan also can be in two forms. One, it can be a short-term loan, STL. The other one, it can be a long-term loan, LTL. And supplier funds can be in the form of trade credit. Fine. So now we have a little bit idea on various sources of funds, and I was mentioning the uses can be for fixed and working capital. So what can be fixed asset? Say you use the money to acquire land, use the money to acquire building, use the money to acquire machinery. I mean, use the money to acquire various assets with no intention to sell but to use it in the business. So they'll become fixed assets. And what can be your working capital assets? Working capital assets are those assets which are required for day-to-day operations of the business. It can be cash, it can be the stock inventory which you keep for future selling or for future consumption. It can be bills receivables which will be created out of sales. What could be bills receivable? You make a sale to the customer, get bill from him instead of money. After some days you get money instead of the bill. I mean, you convert the bill into cash at a later date. So there is a promise from the customer, he'll pay you at a future date. And it can also be something like advances where you pay somebody. So this is a simple nutshell of balance sheet where you have the various sources of funds and uses of funds. We'll also see a little bit on income statement. See, as I told you, income statement would give you the information about your income, and it will also give you information about your expenses. See, income can be two types. One is from your sales, from your direct operating activity, and two, it can be from your non-operating activity as well. And expenses can be for both your operating and non-operating purposes. So the difference between these two, income and expense, can be either your profit or loss, and this is what we have seen in the beginning also. So much we have come to the end of this webinar, and I'm sure you would have really derived value from this short and crisp webinar. If you wish to continue this learning journey, I have an amazing opportunity for you. I have published several courses on banking and financial analysis area, each course costing 2,000 rupees. But for you, I'm going to give you a special offer. Here we go. Banking credit courses bundle. This includes course number 1, banking credit analysis process. It's a comprehensive course with 200 plus lectures. It covers financial analysis, working capital, term loan, LC, BG. It's a comprehensive ever course. Then we have course number 2, that is how to carry out financial analysis as a banker. This is going to focus exclusively on financial ratio analysis, cash flow analysis, and fund flow analysis. Then comes course number 3, how to carry out term loan appraisal and analysis as a banker. It's a comprehensive course focusing on the technical aspects around project finance and term loan. These are all the topics. Then comes course number 4, how to prepare CMA report for bank loan through 8 sections. This course will take you through entire CMA report preparation process for bank loans. Then we have course number 5, how to read balance sheet. So if you are a non-finance person, this course will give you complete insight into balance sheet, how to read them, how to interpret them, how to analyze them. Okay. Then we have course number 6, how to read CIBIL report. By taking this course, you will get a complete picture of CIBIL report reading process. Then we have course number 7, how to prepare cash budget for bank loans. This course will help you to understand the concept of cash budget, which is widely used in short-term lending like auto credit facilities, letter of credit and all. So far I have introduced 7 courses of 1,999 each. It means 7 courses of value 13,993, but you are going to get it only for 2,599, and it is not yet over. I'm going to give you some more bonus. Course number 8, collateral security is a comprehensive study. Course 9, how to carry out credit risk rating for non-trading entities. Course number 10, in this course you will learn banking credit analysis through various case studies. So now it is 10 courses of value close to 20,000, but you are going to pay only 2,599. It is not yet over, some more bonus. Course number 11, how to read audit report. Course 12, this focuses on letter of credit, and course 13 focuses on financial analysis in very short duration. So you have 13 courses of value close to 26,000 rupees, but you are going to get it for just 2,599. So it is basically 7 main courses, and you are going to get another 6 complementary courses, 6 courses as bonus. So overall it is 13 courses of value close to 26,000 rupees. It's 1,500 plus lectures. You get lifetime access for all these pre-recorded courses. You can access them in desktop, laptop, mobile, iPhone, iPad, and the overall cost is around 26,000, but you are going to get it only for 2,599. So this is a once in a time opportunity for you. Enroll now. I'll see you inside the course.